are going to learn about money, banking, and the financial system. Money can be defined as any commodity that is generally acceptable as a payment for goods and services.
Oh, I see. How about the barter system of barter, madam?
That's a good question, Yaya. Before the invention of money, a system of barter was introduced. It is an old method of exchanging goods and services for other goods and services. However, the exchange process has a lot of difficulties due to several limitations of a barter system.
That's interesting. What are the limitations of a barter system, madam?
The system of barter must be double coincidence of wants where both parties need to have what the other party wants, which is difficult and a time-consuming process. Today, we will learn about the 6 characteristics of money. Let's go through them one by one. First is acceptability. Money must be accepted and recognized not only for its indelible value, but also as a medium of exchange for goods and services. Durability is where money must be strong enough to be used and kept for a long period of time. Divisibility is when money must be easily divided into smaller units so people can buy goods with different values.
Oh, now I understand the characteristic of actual money works effectively in the economy. Next, we will learn the 4 functions of money. So the first one is medium of exchange. Money is used for transactions and widely accepted for buying and selling. It solves the problem of double coincidence of wants found in the barter system. For the number 2 is store of value. Money can be saved without deteriorating and easily converted into other forms of wealth. However, inflation may reduce its purchasing power over time. Number 3 is units of account money serves. 4 is standard of default payment. Money is commonly used for future payments due to its stable value, durability, and always recognized. So, do you guys understand these functions of money?
Yes, madam, we clearly understand the functions of money.
Alright, class, have you known about the Keynesian theory of demand for money? According to this theory, there are 3 important motives for holding money. So for the number 1 is transaction motive, number 2 precautionary motive, and the last one is speculative motive.
Teacher, what exactly does supply of money mean? Is it just the cash we use?
Yes, money supply refers to the money we use, but it's not just a physical cash like coins and notes. In economics, we divide the money supply into M1, M2, and M3.
Oh, teacher, can you explain what's the difference between M1, M2, and M3?
So, M1 is the most liquid form of money, meaning it can be used immediately for transaction. It includes coins, notes like cash, or demand deposits, or traveler's checks. So, this is the formula of M1. So, M2 includes everything in M1, plus some less liquid assets like savings accounts, or fixed deposits in commercial banks or Bank Negara Malaysia. So this is the formula of M2. The final one is M3 includes M2 plus deposits in other financial institutions like merchant banks or discount houses. So this is the formula of M3.
The financial system in Malaysia consists of 3 different groups, which are banking institution, non-bank financial institutions, and non-bank financial intermediaries.
Madam, can I give a try? I'm really excited to share what I know. So, banking institutions include central banks and commercial banks. The central bank in Malaysia is known as Bank Negara Malaysia, while the commercial banks are a firm or so-called a profit-making institution.
Not to forget, the non-bank financial institution consists of finance companies, Islamic banks, merchant banks, and discount houses.
Oh, now I get it. How about monetary policy, madam?
Good question, Yaya. Monetary policy is a government policy on money supply and credit creation which aims at achieving higher economic growth, stability in prices, and full employment. There are 2 types of monetary policies, which are contractionary monetary policy and expansionary monetary policies. We're going to talk about commercial banks. So, what exactly is a commercial bank? Commercial banks are usually owned by private companies, not the government, but they are closely monitored by the central bank and in some countries like the US by the Federal Reserve.
Madam, so how do they make money?
Commercial banks accept small, long-term and liquid deposits, then lend that money out as larger long-term loans, such as for homes or businesses. They earn profit by charging more interest on loans than they pay on deposits. Examples of local banks in Malaysia include Maybank and CIMB Bank Berhad. Examples of foreign banks in Malaysia include UOB Berhad and HSBC Bank. Alright class, now we're going to look at the functions of commercial banks. There are four main functions. First is accepting deposits such as current deposits for check use, saving deposits for easier saving and withdrawing. Lastly is fixed or time deposits for earning interest at maturity. Next is they provide loans and advances such as for housing, car, businesses, or personal loans. Next, they provide other banking services such as credit cards and insurance, fund transfer, ATM services, and many others. Lastly is performing credit creation. Next, let's look at limitations of credit creations by commercial bank. First is the amount of cash. The more cash bank holds from public deposits, the more credit they can create. Next is availability of borrowers. Credit can only be created if people are willing to borrow. We shall move to our next discussion, which is the Islamic banking products. Islamic banking is a banking system that complies with the Islamic Sharia principles to achieve the goals and objective of an Islamic economy. There will be 5 types of Islamic banking products, which are Al-Wadi'ah, Al-Mudarabah, Al-Bay Bitaman, Ajil, Al-Musharaka, and Al-Ijara lease or rental.